I want to start with a number here that might actually surprise some people out there. In 2024 alone, the US exported $1.58 billion worth of beef to China, and that impressive figure made it the third largest market for American ranchers overall. It's been this critical pillar of the industry for years now. That's years of building strong relationships and complex supply chains. The global landscape of food supply is constantly shifting, and a new, powerful player has officially entered the arena. We're talking about Russia, a nation with vast agricultural potential and a clear ambition to reshape international trade dynamics. For years, Russia has been quietly building its agricultural capabilities, investing in infrastructure, and modernizing its farming practices. Now, they are ready to make a significant impact on the world stage, particularly in the critical area of meat exports. This move signals a strategic shift in global trade relations, with potentially far-reaching consequences for established players and emerging markets alike. The implications extend beyond mere economics, touching upon geopolitics and the delicate balance of power in the international arena. They're making a significant push to sell their own meat directly to China, a market with an insatiable appetite and a growing demand for high-quality protein. This initiative is not just about filling a market gap. It represents a calculated move to establish a strong foothold in one of the world's largest economies. This isn't just simple business competition, it's a strategic maneuver with geopolitical undertones. Russia's entry into the Chinese meat market challenges the dominance of traditional suppliers and introduces a new dynamic into the global food supply chain. The scale of this operation is impressive, involving significant investments in infrastructure, logistics, and quality control to meet the stringent demands of the Chinese market. Moscow is strategically trying to capitalize on any friction between Washington and Beijing, positioning itself as a reliable and alternative partner in a complex geopolitical landscape. The current trade tensions and diplomatic challenges between the United States and China have created an opportunity for Russia to step in and offer a stable and consistent supply of essential goods, particularly in the agricultural sector. This calculated move allows Russia to strengthen its economic ties with China while simultaneously asserting its influence on the global stage. By leveraging these existing tensions, Russia aims to solidify its position as a key player in the evolving world order. By offering a reliable alternative source and consistent supply, Russia is strategically positioning itself as a key partner for China's huge and ever-growing food needs. This partnership goes beyond simple trade. It represents a deepening of economic and political ties between the two nations. Russia's ability to provide a stable and secure supply of meat addresses China's concerns about food security and reduces its dependence on other international suppliers. This collaboration strengthens China's position in the global market and provides Russia with a valuable economic lifeline. The long-term implications of this partnership are significant, potentially reshaping the dynamics of global trade and influencing the balance of power in the years to come. This move could lead to increased cooperation in other sectors, further solidifying the relationship between Russia and China. The trade landscape between the United States and China has always been a complex dance, a delicate balance of economic interests and political maneuvering. The imposition of tariffs, particularly those initiated during the Trump era, sent ripples throughout global markets, and the beef industry was no exception. These tariffs, designed to protect domestic industries and address trade imbalances, inadvertently created a significant disadvantage for American beef producers in the crucial Chinese market. It's a direct response to the old Trump-era tariffs. It immediately makes American beef more expensive for Chinese buyers. This price hike isn't just a minor inconvenience, it's a substantial barrier that impacts the competitiveness of American beef against other international suppliers. The tariffs essentially act as a tax, increasing the final cost for Chinese importers and consumers. This makes American beef less attractive compared to beef from countries that don't face these tariffs, putting U.S. producers at a distinct disadvantage. The consequences are far-reaching, affecting not only the producers themselves, but also the entire supply chain, from ranchers to processors to distributors. The impact of these trade tensions extends beyond just pricing. Strict import regulations and quality control measures in China can lead to significant disruptions in the supply chain. In 2024, China rejected 43 separate shipments of U.S. beef. These rejections can stem from a variety of issues, including discrepancies in labeling, concerns about hormone levels, or even political considerations. Each rejected shipment represents a significant financial blow to American producers. Every rejected container is lost money. The costs associated with these rejections are substantial, encompassing not only the value of the beef itself, but also the expenses related to shipping, handling, and storage. Furthermore, the uncertainty surrounding these rejections can create logistical nightmares for producers, making it difficult to plan production and meet demand. The cumulative effect of these rejections can erode trust in the reliability of American beef as a consistent source of supply, further damaging its reputation in the Chinese market. The challenges faced by American beef producers in the Chinese market are multifaceted and require a strategic approach to overcome. American producers are fighting this battle on two fronts, competing on price against tariff-free rivals. On one front, they must contend with the price disadvantage created by the tariffs, making it difficult to compete with countries that have more favorable trade agreements with China. On the other front, they must navigate the complex regulatory landscape and ensure that their products meet the stringent quality standards imposed by Chinese authorities. This requires significant investment in quality control measures, traceability systems, and compliance procedures. Moreover, American producers must actively engage in lobbying efforts to advocate for more favorable trade policies and reduce the burden of tariffs. The situation demands a collaborative effort between producers, industry associations, and government agencies to address the challenges and ensure the long-term competitiveness of American beef in the Chinese market. The vulnerability created by tariffs and trade restrictions doesn't exist in a vacuum. It creates an opportunity for other beef-producing nations to step in and fill the void. And that vulnerability is the perfect opening for a competitor who's ready to move in. Countries like Australia, Brazil, and Argentina, which often have more favorable trade agreements with China, are eager to capitalize on the situation and expand their market share. These competitors can offer beef at a lower price point, making it more attractive to Chinese importers and consumers. The long-term consequences of this shift in market dynamics could be significant, potentially leading to a decline in American beef exports and a loss of market share in one of the world's largest and most lucrative markets. To mitigate this risk, American producers must focus on differentiating their products through quality, branding, and sustainability practices. They must also actively seek out new markets and diversify their export destinations to reduce their reliance on China. Russia's overall meat exports surged by 24% in 2024. This remarkable increase underscores a significant shift in the global meat market, highlighting Russia's growing prominence as a key player. The surge isn't just a minor uptick, it represents a substantial expansion, reflecting increased production capacity, improved export infrastructure, and a strategic focus on international trade. We're seeing the culmination of years of investment and policy adjustments aimed at bolstering Russia's agricultural sector and positioning it as a reliable supplier in the global arena. This growth is particularly noteworthy given the complex geopolitical landscape and the various trade dynamics at play. The numbers tell a compelling story of resilience and strategic adaptation. Their meat sales directly to China grew by 14%, hitting $560 million. This substantial figure demonstrates the deepening economic ties between Russia and China, particularly in the agricultural sector. The increase in meat sales reflects a growing demand within China and Russia's ability to meet that demand effectively. This trade relationship is mutually beneficial, providing Russia with a significant export market and China with a reliable source of meat products. The $560 million represents a considerable influx of revenue for Russian producers, stimulating further investment and growth within the industry. It's a clear indication of the strategic importance of this trade partnership and its potential for continued expansion in the years to come. The growth is fueled by both increasing demand and improved logistical capabilities. The real turning point came when China's customs office announced it. This announcement signaled a formal recognition and acceptance of Russia as a major meat supplier, solidifying the trade relationship and paving the way for further growth. It wasn't just a procedural update, it was a strategic endorsement that carried significant weight in the international market. The announcement likely included details on streamlined import procedures, quality control standards, and other regulatory frameworks that facilitated smoother trade between the two countries. This official acknowledgement provided assurance to both producers and consumers, fostering greater confidence in the reliability and sustainability of the trade partnership. It marked a pivotal moment in the evolution of Russia-China economic relations, underscoring the importance of government policies in shaping international trade dynamics. The announcement acted as a catalyst, accelerating the growth trajectory of Russia's meat exports to China. China now accounts for 64% of Russia's total beef exports. That's not a business plan, that's a strategic alignment. This dominant market share underscores the profound shift in global trade dynamics, highlighting the increasing interconnectedness of the Russian and Chinese economies. This isn't simply about selling products, it's about forging a long-term partnership built on mutual interests and strategic objectives. The 64% figure represents a significant level of dependence, indicating that Russia's beef industry is now heavily reliant on the Chinese market. This strategic alignment goes beyond mere trade. It encompasses political, economic, and even geopolitical considerations. It reflects a shared vision for regional stability and economic cooperation, positioning both countries as key players in the evolving global landscape. This alignment provides Russia with a stable and reliable market for its beef exports, while China gains access to a consistent supply of high-quality meat products. It's a win-win scenario that strengthens the economic ties between the two nations and reinforces their strategic partnership. It's a fundamental realignment of global trade. The landscape has been altered, maybe permanently. For years, China was the promised land. Now it's the source of their biggest headache. So how do you feel about this significant shift in one of America's key export markets? What does this mean for the future?